continue to see some more attendees, but I think we'll get started. So thank you to everyone who's joined in. Welcome to what is now the 20th edition of the Uday Knowledge Sessions. We've been around for quite a while, and we're really happy to see some known faces as well as some new ones joining our session today. The Uday Knowledge Sessions, as you know, is brought to you by Mumbai FinTech Hub and PwC. And a bit for those who are new to this, just a bit on the Mumbai FinTech Hub. So Mumbai FinTech Hub is the FinTech vertical of the government of Maharashtra, and is primarily focused on the growth of the fintech sector in the state, as well as beyond the state as well. And one of their key initiatives is to look at focusing on building fintech talent through education. And that is what Uday is. Uday is the fintech education program of the Mumbai FinTech Hub, and focuses on providing students like yourselves who have joined in for this session, or students who are interested in pursuing careers in fintech, by equipping you with the relevant knowledge and information that you need to explore such careers. The Uday Knowledge Sessions has been specifically crafted in this whole philosophy. And the format is a 1 hour session where we invite successful, experienced entrepreneurs and leaders in the fintech space to come in and provide their perspective on some core fintech models, and also talk about their journey, as well as what are the skills that the sector requires of students like yourselves who are looking to pursue such careers. Today, we are very excited to invite Deena Jacob, CFO and co-founder at Bank Open. Bank Open, as I'm sure a lot of you know, has really developed a very strong position for itself in the whole open banking and new banking space, with specific propositions for small businesses. The small business segment itself continues to be, especially now, an extremely important segment, and continues to be highly untapped from an FS perspective. So it's a very interesting space that Bank Open really operates in. And they provide a host of innovative services to this segment. And it's going to be interesting to understand the open banking model in this light with Deena today. Deena herself, of course, comes with over 18 years of industry experience and has led teams across a wide array of different functions within the organizations that she's worked at, including finance operations, purchase operations, HR, performance management, business strategy, to name a few. And she's also previously been associated with Tabzo, Taxi for sure, EY, ICICI Bank, and many more. So I really encourage the students today to take advantage of Deena's experience and really ask her questions to get the most out of today's session. We are on our end very excited to have her today take today's session. Before I hand it over to Deena, just a couple of quick housekeeping points. As with all our other sessions, we'd like this to be as interactive as possible. So Deena will be covering some of the core concepts to begin with, but we invite you to keep posting your questions, and we'll at different points ask those questions to Deena. So if you're logging in from your laptop, as you can see from the screen right now, there's a black button with 3 dots. Click on that and choose the Q&A option, and that'll open up a chat window where you can type in your question, but do make sure that you choose all panelists when you type it in so that we can see it. I will have a look at your questions, and at the appropriate time, I will pose that to Deena for her thoughts, and we can have a free-flowing discussion in the process. Similarly, if you're logged in from your phone, it's a very similar flow. The 3-dot black button, Q&A, choose all panelists, and then type in your questions, and then your question will be posted. I think that's about it. And it's our pleasure to invite Deena to take over and give us her perspective. Welcome, Deena.
Thank you so much, Ramesh. It's a pleasure to be a part of this session. And good evening to you all. So as a part of today's session, what I will be taking you through is, first of all, we from Open, we started as Asia's first neobanking platform for SMEs. So today's topic being MSMEs and open banking, I would just give you a brief about how we all came about starting Open, and then today's agenda would be take you through what is open banking, and then what we do, so that there is a connection of practically a connection of the whole concept of the open banking and how it is coming about from the way in which we are solving it at Open. So the point is, for SMEs within banking, traditionally banking has been, just a second, let me pull out the presentation also. After that, it will be. Just 2 seconds. I'm sorry about it.
No problem.
Are you able to see the screen?
Yes.
Great. Okay.
Deena, your mic is on mute. We're not able to hear you.
It's fine now?
Yes, Bobby, we can hear you. Yeah, we can see your screen as well.
Great. Okay, fine. Okay. So in terms of SMEs, the key challenges that SMEs face in when it comes to banking is that the traditional banking always focuses a lot more on. I mean, it is not a banking systems issue as well, right? From a volume perspective, a corporate banking versus an SME banking would be from a volume 80-20 perspective. Corporate would definitely give around 80%, lesser number of entities to look at, lesser number of complexities to deal with, and then that gives a maximum revenue for the banking, and it's a massive industry, right? That being said, SMEs are the backbone of India's economy, needless to mention that. So, however, what's happening in the traditional system also is that for SMEs, the right tools and the banking and the systems available for handling the entire complexity of the scenario in which they are functioning, it is not so much available within the banking system. So this is reflected in the fact that, let me take you through a few statistics. What is SMEs and why we are talking about it. So in terms of the numbers within India, we have about almost 64 million SMEs, which is like divided into micro, small, and medium. Again, it is categorized based on the turnover, investment, all of that. So this contributes around a third of the GDP. And if you look at it from an export perspective, almost a half they contribute to, and employment is 120 million. So you can look at why this is an important sector, right? But at the same time, if you look at the requirement of capital, which is also a part of banking, so I'll tell you why I'm highlighting on it. Source of capital, the 84, almost 90% of the number of SMEs are left away from the formal capital access. And that constitutes about 400 billion of credit gap in the MSME sector. So these are some of the sneak peek into the issues that an SME goes through. So the challenges, I come from background last 20 years, I've been into almost 18, 20 years, 2 decades almost. I've been into finance and managing finance for various companies, last 10 years into the startup ecosystem. And that's where right from very early stage of incorporating a company wherein you don't even have any revenues, you're just looking at, opening a current account with a bank, and you go to a branch, walk into a branch and figure out there are umpteen documentation requirements. And after that, it's only a current account you get. If you want to do any kind of digital transactions, that becomes a extremely tedious job. And especially when it comes to digitized new age way in which businesses are doing, right? It's extremely difficult to get everything close into one system. And imagine the issue that an MSME face in terms of your banking transactions or a cash flow and the payments is happening in your bank account, right? And that in no way is connected to any of your accounting system, and leave alone your business system. All these are disjoint systems, first of all. And second, while coming to imagine the case of an online collection for that matter, you have a payment gateway. You will be going and using a payment gateway for that matter as another source for you to make all the collections as a business when it comes to it. So that money flows into your current account. But imagine, since it is not connected to any other system, net of TDR, net of tax, plus service tax, whatever is getting deducted, you have no clue how many transactions and what got settled into your account. And that is where, the reconciliation becomes a huge problem. So why I'm highlighting all of these is you can imagine what an SME would be going through in terms of, managing their finances. So this is something which I have seen firsthand, faced it, running, the finance department of smaller, very small to, different scale companies. And then my co-founders, all four of us come with the same issue, or rather, we have been with the first hand facing this issue, previous entrepreneurial journeys into the payment system, working very closely with SMEs. I've seen the struggles from close quarters. That's how we came, started thinking of what could be the potential, issue, root cause of this, and what could be a potential solution from a technology perspective. So that was the genesis of Open, and why we chose to look at SMEs itself as a use case to solve for. So that's a background, and then now let's come to, and now you have the statistics of SMEs. Now let me take you through the credit gap and the reasons behind it. These some of the reasons which are highlighted, that itself comes to the brings to the point of what causes the credit gap and then the banking woes. So these two we will dwell upon a little before we jump into what is open banking and why, because this background is extremely important for you to understand why we are talking about open banking, right? Because when we talk about a particular topic, there should be a reason why it is coming through. So in terms of this 400 billion credit gap, if you look at it, the issue is that there are two ways in which when you lend to any business or any consumer or anybody for that matter, there are two critical things you look at, right? One is the ability to pay. The second is the intent to pay. So when you look at the ability to pay, you would have a whole lot of data processing which happens, right? Whether your cash flow, when it comes to a business, whether your cash flow supports it, whether you have seasonality in business, whether you have growth in business happening in the right way, whether the business is being managed correctly. So this is where one size doesn't fit all, right? In the banking right now, if you see, there are traditional models of looking at it as look at your historical data, look at the data from various sources, and then have a way cookie cutter kind of scoring model. If the cutoff is so much, or rather you score on certain parameters XYZ based on the historical, and some of this data again is not available in the format that they would be acceptable for them. And this is where the whole data asymmetry and the challenge of an SME to put all of that together into a single place is what creates this whole credit gap. So if you look at it from the NPA rates also, it is quite evident that the medium MSMEs don't have so much of a problem of the intent to pay for the smaller number that they have already been the taken care of. But at the same time, the 89% gap that we were talking about highlights the fact that the challenge is in this data asymmetry. If you see on the left hand side, you need to figure out macro trends. Then there are bureaus, the credit bureaus, which talks about your historical intent to pay, or at any point in time you have taken a leverage, you leverage yourself and you are not able to pay for whatever reason. It could be a cash flow issue, or it could be an intent issue for that matter. Or from a bank statement, there are multiple. On an average, each a somewhat an evolved business would have anywhere between 4 to 5 a number of bank accounts, especially, it's a reconciliation issue again, because for a payout, you might use one account.
Dear, so sorry to interrupt. Would you be able to put in full screen? There are a couple of comments saying that they aren't able to read the text very clearly.
Oh, okay.
Sorry for the interruption. Yeah, you could just.
Hello, am I audible now?
Yeah, you're audible. Just if you could put the presentation in full screen mode, I think that they're finding it a little difficult to read some of the text.
Oh, they're finding it difficult to read it?
Yeah.
Just a second, let me open the PPT itself. Yeah. Just 2 seconds, sorry about that.
No problem. Sorry to interrupt. We just got a comment.
Absolutely no problem. Yeah. It's okay now?
Yes, perfect. Thanks.
Perfect, great. Okay. Yeah, so we were talking about the credit gap in SMEs. So, these are some of the reasons why SMEs are, the assessment of SME for giving them leveraging or rather giving credit to them is falling through the cracks. So income tax GST, again, coming back to data, bank statements, coming back to multiple places or, data which rest with the regulated entities. Audited financial statements, it could be from MGA, it could be from, they have smaller entities who would be having their own, file data from a tax perspective, or some cases they couldn't even have anything like the formal or rather reports and structures are not available for them because they might be doing cash transactions, and these are the challenges why they are not able to get access to the formal credit. And this is a huge gap. If you look at it, 400 billion is not silly, right? It's almost more than a third of the entire requirement of capital for that matter. And the second problem, which the SMEs also face, is the banking cost. So, if you look at the banking issues, when it comes to the banking issues in a business generally, so this is also applicable to any business, not only SME for that matter, right? If you look at it from the customer to the, from the supplier to the customer to whatever you have to do, there are multiple stakeholders or processors, data information holders, all of that, all of whom in the ecosystem who has to play together to bring it to pass or rather, make it to happen. So there is cash flow attached to it, there is document flow attached to it, there is data flow attached to it. So this is where when it comes to banking, especially in the modern world, there could be the traditional way of check, cash, all of them are giving way to more of digital transactions, right? Be it PG transactions, QR, or be it UPI based, all of that is coming into picture right now. This is where the complexity is increasing also. So there is multiple bank accounts. Earlier, as I mentioned, the reason just for reconciliations and for segregation itself, which exist for a entity. And then there is your accounting and the tax systems which come into picture. And then you have, employees who would be on the feet on the street, for example, or people who just go and make sales out there. You travel, you do various expenses, business expenses come into picture, which again, becomes a reimbursement or spends which each department would have to do. For example, your payment to your vendors, it could also be bank transfer, it could also be credits or cards which should be used. A classic example is something like a Google AdWords or a Facebook for in the initial stage till the time you reach critical spend threshold, you will have to compulsorily put a credit card. So these are some of the cases wherein the entrepreneurs normally go ahead and put their most of the time use their personal cards or personal resources are being used to solve these. If not, various other service providers come into picture, be it a payment gateway, be it a or all put together. Finally, what it cannot be done through tools happens through employees, right? Or people manually, people who do the reconciliation. So this is where earlier also I mentioned in terms of the bank system where the money flows does not talk to various other systems for that matter. Neither your accounting system, which again is a manual process from the bank, you need to figure out because the bank doesn't talk what kind of categorization the accounting system talks and what kind of names your accounting system says. So you will have to figure out with number, with a whole number, with the name, all of that from the bank and manually gets into the accounting system. And that has to be matched with your business system again. So these are some of the key challenges that a business goes through. And you can imagine how much time an entrepreneur who should be spending on solving all of these compared to what he can spend on focusing on his business. And more so when smaller the company, higher will be the time that an entrepreneur or somebody who's running the business will be spending on all of this, right? Because they wouldn't have so much of a wherewithal, neither from an information nor from a money spending perspective, that they can put all of these systems together. And neither the banks are solving for all of this. So this is a premise of what challenges SMEs go through. And now let's come and talk about, why would the open banking or a banking as a service or a platforms, why these are being spoken about right now. So when we talk about open banking, what does it include? So open banking, and so in fact, there is a slight difference between when you talk typically about the open banking and banking as a service as such. That's why I've just combined both two, because that both will become something like what we call as a platform, neo banking. All of that would include both the aspects. Because there is one, the data sharing aspect of it, which is where, from the banks, from an open banking perspective, what happens is banks information, what you have, previously we have spoken about bank statement is an important document for somebody to look at their previous transaction historical data and then lend or whatever, right? So that is where the data resides in terms of their cash flow transactions. So that data sharing with third parties through whatever system, I mean, it could be a fintech, it could be an in-between layer. So that sharing is what is being, predominantly covered by the open banking area. Whereas when it comes to the API and other services, it gets connected, or rather, finally, it gets connected to banks' functionalities can also be connected and given to the consumer in terms of how they can handle that through an app or an in between service provider. So one, there is, as I mentioned, one, data access, which can be with customer consent, which can be used for various purposes. Second, you also have functionalities like a payout from a bank, or lending from the bank, which can go to them with the interface provided and the technology provided. For example, when you make the collections that is being done, again, connecting to the banking system wherein the functionality happens, and you provide it through a connector of sort. So this is where the second aspect comes into picture also. So in terms of the entire ecosystem, you would have the payment services, account information service providers. Then we have the fintechs and other credit platforms. You would have, the cross-industry partnerships which come into picture. Other banks, multi-banks, APIs which can be connected. So all of these ecosystem, right from, maybe a KYC authentication to various other things, payments enablement, data, all of that put together is what we call, or rather, what we address in the entire open banking and the digital banking services, banking as a service that we speak. So in terms of in India, just to take you through how this, both from a functionality, data and the payments part has been evolving in the last decade, so to speak. Initially started with Aadhaar identity, which again, helped it much better to, or rather that infrastructure helped us to have build a lot of other things on top of, data sharing as well as, payments kind of. So 20 after, then we had other enabled payments coming into picture, KYC being sorted. All of these are essential for banking of sort, right? Either from a document perspective or from a transaction perspective. I mean, data perspective or from a transaction perspective. Then we have the e-signature and the DigiLocker. UPI came into picture, and then, very recently we have the regulatory sandbox. And then we have, in between, of course, I forgot to mention the critical part of the NBFC account aggregator. So the account aggregator part is a classic example of how, the PSD2, the whole thing which started off in the Europe as a full-fledged regulation in terms of data sharing. So it can be, it can draw parallels to that, to the account aggregation part of it, wherein multi-banks, when you have multi-bank accounts, earlier you couldn't just like that, share the data. You might have seen when you go for lending or when you go for taking a loan, they would ask for multiple bank statements to be printed and given to them. So with all this, that's a consent management in between intermediary layer, who would be taking the consumer's consent and then sharing data onwards to people who have to consume and act on it. So in the earlier scenario, why this consent management is extremely important is that in the entire open banking system, that is one of the key areas that one needs to look at. Because imagine a bank or rather, let me put it this way, like a bank has got a lot of financial information about you. It is very private data, right? You wouldn't want anybody to share your private data, where you have spent your money, what you have done with it, how it is going through, without your consent going to anybody and without a specific purpose. And this is one of the key areas in the entire system that needs to have be highly regulated also. And that is where, everywhere you see regulation coming up. And that's why in NBFC AA, for example, just to give you an example, if you are a licensed as an NBFC AA, you cannot have different other streams of revenue. For example, you cannot be a lender yourself. Reason being, with this data, you will have a conflict of interest, right? What are you doing with that? So that's where, as a consent manager, you cannot have other income which can probably conflict with any of these. And that is very critical for a framework wherein you are handling somebody's private data. So now coming to the ecosystem which comes as an aggregator, now we have data providers who would be like, a kind of, or credit bureaus, for example, who gives data about, historical data. Technology stack providers, and the entire stack for that matter is also very critical for the open banking and the digital banking part. And then you have the API stack players, and API is a major part for, major element in the entire neobanking or the open banking aspect, so to speak. So this is an overview of what an open banking is. And now I'll come to how from Open's perspective, or rather how as a case study or the way in which we are approaching this whole thing. Now, so far we have seen about the looked at MSME's challenges right from banking as well as from a data sharing perspective, which impacts them onward in terms of right all the way till the time they get a credit. Because the fundamental thing is having a cash grip on your cash flow, which itself becomes a challenge with the disjoint systems. And second, onward with the data sharing walls, Chinese wall, which exists with each of these banks and everything, that has become again, has become a roadblock for them to get access to formal credit. So these are the two key issues that SMEs in the current banking scenario faces. So now, breaking those walls. What we are doing is we are combining the business, banking, and the platform. So the business part of it, we have in the banking, what happens? So the core of it, heart of it is a business current account, wherein all your transactions happen through that particular current account. And whenever a transaction happens, which is through on the current account, when I talk about, you have the capability of through a partner bank having that current account which can make a payout. You can receive any kind of pay-in that through any kind of digital mode, NEFT, RTGS, IMPS, again, UPI QR code, again, PGs are attached to it. All kind of digital payouts as well as pay-ins are sorted on the same platform, connected to the same account. And now imagine when you are adding a beneficiary on the, or rather, adding as a vendor or adding raising an invoice to a customer, all happens through the same platform. And once you recognize to whom the money is going or from whom the money is coming in, that reconciliation happens through technology automatically. Now, how does all of this happen? So we as Open, or rather as a company, into the, when we provide your banker, what we do is we connect to the core banking system of the partner bank, and there is a one-time consent wherein the APIs and the connectors speak to with the customer's consent. There is the relationship established with the banking system, and after that, the entire platform, or rather the technology, is handled by Open, which is where we connect the banking system to the business system and to the accounting system. So we have an automated accounting in the backend. So you don't have to download any systems or any statements, nothing. So when you are making a transaction from, say, to XYZ company, Open is raising an invoice to them for 500 rupees. When I raise a GST compliant invoice on Open's platform, so the invoice goes to the customer, as well as there is a link which goes to the customer wherein you can click and use any kind of payment mode. And the moment that money comes into Open's account on this platform, what happens is it is recognized as earlier when the invoice went out, it was recognized as XYZ company has to pay me 500 rupees. And that comes in the reports, all kind of reports in terms of the receivables reports, be it any, the account which belongs to XYZ on the platform. While 500 was as an outstanding there, the moment money comes in, automatically system identified XYZ has paid this money, because it's through that link which the system identifies, it comes back and sits automatically into the accounting system. So this is where, if you look at it, the banking is very, very tightly coupled with the accounting, which again, otherwise is generally a very tedious process. You will have to match which entry, who paid, whether the transaction, if the amount is not matching, UTR is not matching, name is not matching, you really don't know from where it came. So those kind of things. And then again, you have to make an entry into another system altogether. This is completely eliminated. Now see the benefit of it. So if there is an SME who is like, today Panwala, who is just collecting by QR or whatever, right? If they're connected to this system, which also we have, like we serve today around 600K SMEs all across India and cover around 13,000 plus pin code, so to speak, and doing about 15 billion plus transactions on an annualized basis in USD terms. So why I'm telling you this is mainly because we cover the very grassroots level, all kind of segments as well, including right from a very fragmented, not so tech savvy street vendors, all the way to people who do probably might be doing 100 crore upwards transactions in a day kind of. So this is where the importance of how we can get them into the formal economy comes as well, because data, what usually resides in different service providers, comes together onto the same platform. You need not only be looking at the bank statement of 3-4 bank statements and figuring out what happened. It could be cash. If they pay also, we have an option for them to record, or just it is a simple click and just record and put it there. So the whole idea is that the entire data of what you do as a banking transaction or a business transaction should be captured in one place. The second aspect is that we also understand that multiple banking entities, or rather, they could already be having various accounts even before they started using this kind of reconciliation systems for whatever reason. So we have a multi-bank connect. So again, the requirement of the multi-bank connect is that unless you have 100% data which you are looking at, there is no point in making any kind of decision based on that. So that data comes onto the platform. You can connect whatever bank accounts you have on the platform, and that again goes back into the automated accounting. So you don't have to do anything additional in terms of reconciling those, various other accounts. First of all, you can also manage the entire account, or rather, see what all are your balances, what all came in, what went out, without having any hassle of looking at, a manual reconciliation, so to speak. Payment gateway, something which we provide in terms of, the digitization. And then the biggest thing is, like, again, cards, if you look at it, various cards for that matter. So for an SME, let me give you one classic example. Getting a credit card for a very small business as a business credit card or a corporate credit card is next to impossibility, even for a very small business, or even for a funded startup for that matter. Typically, what happens is you will have to go to the bank and place an FD, and probably 60 to 70% they will leverage and give you against that FD. And credit card, where it becomes extremely crucial, for example, is if you're running a business, for example, when you're putting a Facebook or a Google kind of usage, without a credit card, you will not be able to do it. Where do you get that again, right? So this is one of the use case why credit cards are important as a banking, entire end-to-end banking, when you look at for solving your payments and other transaction issues. Lending we spoke about, and then we have then the next part of it is that in terms of finance management, you have three critical areas that any company, any business in the operating cycle will have to look at, which is your revenue and your accounts receivable part of it, then your vendors or the expenses and your accounts payable part of it, and then comes your payroll, which is your high ticket in the entire, the financial transaction segregation. And then the miscellaneous expenses, which is where the cards or petty cash, all of that comes into picture for that matter. So this is where from payout from the banking transaction itself and the invoicing solution we have, plus the vendor management module, takes care of this entire data from a completely seamless automated manner. The next part of it, once your accounting and banking part is done, Obviously, the biggest issue that the businesses would also have is to have the growth tools, right? So growth tools, or even access to discounts, or the premium services, which only at scale you would be able to get. So this is where, as a platform, Open Hub, when I talk about the hub part of it, we have something as a marketplace wherein, there are, as I mentioned, 600K SMEs that we work with today. So they can, based on the PIN code, based on the services that they are providing, or the products they are providing, they can list it on that marketplace, and there is, commerce can happen on that, which is a business enablement, or rather, business growth tool, which they could interaction, and it provides a community for that matter. And Open Circle is where, as I mentioned, the reward programs, which otherwise would not be available for them, be it a Google AdWords, or be it, certain other benefits, which at scale only you will get very good deals. There will be strategic in the central deals that providers who are sitting, various other service providers that sit in the middle can craft for them and give it for them. So Tally plugin, I'll tell you a classic example why I'm also talking about Tally plugin here. So in India, in MSMEs, if you look at it, Tally is one of the most popular business accounting tool which is used, and it is not on cloud. It's, majorly it has got both the versions, but majorly on-prem. And the key reason is that Tally has been a great success story. It is another thing which I think, if you are interested, you should just go ahead and read about how Tally became so popular across India as well. So there are still two reasons why India and the MSMEs are not getting, completely onto the cloud part of it on accounting also. So one is, especially on the remote locations, you have a key challenge of connectivity for that matter. And second also is that Tally has been so popular that in most of the remote places, the trained accountants that you get are majorly on Tally. So that's why we said, we being, or rather, open, or irrespective of whether it's open or any other service provider. So when I talk about open, just take it as a case study of how this is connected to open banking, is connected to, serving SMEs. So when we serve SME and are planning to solve for their cash flow challenges and their banking challenges, the primary thing is that how seamlessly, how effortlessly they can carry on the business, have a grip on their cash flow, have predictability of that cash flow. And then there can only be two situations that happen, right? One is there can be a credit gap, or there can be a gap in terms of money requirement, or there can be a surplus. So this is a way in which, building blocks are getting your entire payments done, getting the data into one place, getting, data which rests in other places, such as, whether it's GST, whether it is IT, whether it is income tax department, whether it is MCA, which is your, the Ministry of Corporate Affairs, if you're a private limited, or any other, company, company LP, whatever you are governed by the Companies Act. So all of those databases becomes extremely critical, or maybe even for that matter, AFC KYC registry for that matter, right? If you want to access the KYC in a very simple manner. So that once data and this is sorted, then comes that is the reason why, again, when you look at the accounting also, it's extremely important that your entire transaction history is covered as well. So that is where now we are giving Tally plugin, because none of us from an open banking perspective doesn't become the best accounting system in the world. That is not the whole idea, right? We need to put together the entire data into one place. So if the entire India, majority of the SMEs are on Tally, what we have done is we have also developed a great plugin for the MSMEs to go and connect, so that that data gets pulled in. So this is a classic example of the data sharing from various sources in the entire open banking scenario. So we pull in data, do the banking transaction, which otherwise is not connected on a separate accounting system. And the platform would take care of, identifying who paid, whom we have made the payment, what kind of knockoff in the account should happen, and it posts back into the Tally as well. So the last part is the APIs and the program interface that we give, right? The application interfaces that we provide also has got all these options that we are giving is also available on the APIs. So why I'm talking about the APIs? This is the genesis of, ultimately banking as a service that you give. So irrespective of, one is the way in which this functions as a platform. Now let's look at how this entire thing comes together as a banking operating system, right? So one is direct to SME. They can just use it as their banking partner plus banking plus, right? I mean, a banking plus payments. I mean, that entire payments plus accounting, reporting, recording, and even for the management information system for that matter, which gives you a accounts payable report, for example, aging analysis of that, who has to pay you what, gives you workflow in terms of sending reminders. So that is where, for SMEs, it functions as a complete package or a platform, banking plus payments plus growth tools, which they can look at. And now coming to the API part of it. Since we have both data pipes available as well as the banking functionality pipe available, this is again very crucial part of near banking / open banking, so to speak. This can be used by other fintechs, enterprises. I mean, nobody has to reinvent the wheel, right? So you can just take these APIs and the functionality connectors and make solutions based on whatever you want. For example, a company which is into, say, for example, we work with a bike taxi company. So what they have done is they have taken our APIs, and there are multiple the entire driver, the drivers on their platform. They've taken the APIs and solutions for the account opening to card issuance to payout mechanism. All of that happens through the APIs, and they have crafted their own solution based on it. So this is again a classic example of how the banking connectors help in terms of democratizing the entire banking as a service and making the interface is seamless, and the use cases are being expanded also, right? Which wouldn't have been possible in the traditional way of doing things. And the third aspect also very interestingly is that there is also, once you do this platform, this is a very, very collaborative effort, right? The bank in the back end, you can never eliminate that, right? I mean, and that is a very critical part of any economy and any system for that matter. The licensed entity who is regulated to look at, initially itself we discussed about the importance of regulation in this entire regime, right? Somebody needs to guard the data privacy, somebody needs to guard what is being done with the money that is flowing. So all of that sits with the banking partner, or rather the licensed entity, which is regulated again by the central bank, and the other aspects which the tech service providers or the in-between layer, the neobanks, the data providers, all of them have also come into some sort of regulation. So this is where for the banks, or even for that matter non-banking financial companies, they can also take some of these platform elements and provide onward to the customers for making the entire experience extremely seamless. Classic example is we also, on a white label basis, you can see we have partnered with 18 plus banks right now in India, providing various services, including, co-branded services. Some of the banks have literally replaced their SME banking side with solutions Open has developed. So this is a classic example of the collaborative way in which the open banking is moving forward. So in a nutshell, the way in which it comes is integrations with licensed banks and service providers is, they are the core of it. From the license, an operating system comes through, which makes it, a much more a modular way in which the banking services. Today, if you see in the banking services also, especially because of the legacy, the traditional, each of the systems, the lending system doesn't talk to your account holding system. Even if you're a FD account holder, if you go in for a loan account, they will still ask you right from the beginning all kind of documentation, all kind of history, as if they're meeting you for the first time, right? So that is not this is precisely where it still acts in, or rather the systems are built in silos, and that is the reason why an operating system which comes across, which can have modular way in which it can be onward given to various purposes, is extremely critical. So this is what I mentioned about functionality, connect to the functionality part of it also. So now coming to the APIs part of it. So this is just to give you an overview of how the API part of it from connects to the bank can onward go to various other businesses, and what are the key elements which differentiates that. It is built for scale, developer focused. So if you go to a bank and if you want to today take, so let me share you the experience we had in 2017 when we started also, right? So when we started and when we started approaching banks, the first question was like, are you building a bank in itself? So it took almost, 5 to 6 months while we were parallelly building this product, because there was a high conviction on this has to be solved. But at the same time, a banking partnership in India for license reasons is extremely crucial, and that is where it all starts with. So we started from the way in which banks were very apprehensive of what is the value add in the whole thing that you are doing, to somebody, especially ICICI was a bank that we went live with at first, and wherein we had the mind of, okay, let's try, to the way in which we have seen mass adoption at that point in time, which made the banks also figure out that it is a great tool for acquiring, or rather, they great connector in terms of attracting SMEs, and they saw that they started being with the bank for actively for much more transaction access. So which essentially means that whichever account is connected to this kind of platform sees a whole lot of activity increase, mainly because it solves for various other various other issues. That's how when it came to 2018, and when we launched the full-fledged the second version of the product, we had in the first month, I still remember, we had the first launch of the product. We thought in the first month, probably first year, it would be good to have 10,000 SMEs on the platform. And we had that in the 15 days of launch, in fact, for the 1 year. So that's when we realized this is a need of the hour. And what kind of, at that time, we just had, AP, accounts payable and the accounts receivable solution. And that itself was a huge pain point to solve. And now we have evolved into the API banking, which is where we see a lot of enterprises, NBFCs, other fintechs, and even neobanks who are taking the APIs and building on top of it, right? Because it's a connector from the bank side. So that is where the power of API comes in. This is precisely what banking as a service comes at, banking in a box, right? And you can have embedded fintech, everything built on top of this. So this is another thing which I wanted to bring your attention on, and it is a key topic which is coming up as well. Another aspect of the entire open banking also. From a lending side, you would have heard about the OCEN, the Open Credit Enablement Network, which is coming through. And the fundamental principle of that also is that in terms of lending, as we earlier mentioned also, historical data is what is being weighed upon or given a high weightage at this point in time, also because of a lot of reasons in terms of not having visibility into totality of the dynamic existing data of businesses, right? So that is where traditionally, if you see, we have had a term loan as a product, or a line of credit which you once gave, overdraft kind of, which you once gave with some sort of assessment made, and then enhancing that limit becomes extremely challenging. And then when it comes to invoice discounting, to be certain set of buyers only you trust so much to discount the invoice and then have certain pricing. So there are limited products which you can give, and to limited people, right? So now the cash flow based lending is a very high theme which is coming up right now, especially fueled by all these, the enabled by, in fact, I wouldn't say fueled by, the enabled by the open banking and the initiatives which are coming up in terms of data sharing. So you have connected to various other systems. You can have a GST system connected and read data from there. You can have income tax database connected, and you can have data drawing from taken in from there. And also forgot to mention, like new banking platforms like us, we also enable the entire tax management part of it, including the GST filings, including payment of tax, payment of filing of returns, all of that also on the same platform, which gives us access to, with consent obviously, gives us access to a lot of information which can lead to predictive cash flow, and even for that matter, on a very regular basis, the patterns of whom do you deal with, expand the buyer base, for example. So these are all possible with the data sharing, in fact. So from there, we're able to expand more, like that 400 billion credit gap. When you match the right demand to the right source of capital with the right way in which you can do the scoring, that is where the cash flow based lending becomes extremely relevant. And that is exactly how the Open Credit Enablement Network also is going in that manner. The loan service providers can be anybody in the entire network. It can be anybody who has got customers who are looking for a loan. It need not necessarily be somebody is coming and asking for a loan, but for example, a pay later on or a pay later feature on an e-commerce. That is also, it is can be treated as an LSP who looks at who needs this kind of data, right? Or rather, who needs this kind of lending for that matter. So that's how that becomes a loan service provider kind of who tells who is looking for, where is the demand coming from. And then not everyone can look at that, and or a traditional bank might not be interested in doing this micro kind of lending or a certain ticket size to certain segments. And if you look at the lending partners also, they're all segmented in various ways, right? They would be having strength in terms of looking at, say, some would be focused on agri, some would be focused on retail sector, some would be focused only on, real estate could be a negative sector for many. So looking at that, if you go and knock on the doors of who is not going to provide, wherein you don't have a system which says that if the demand is from so-and-so quarters, who should be providing the credit, that becomes even more a problematic situation. So this is where cash flow based lending and the OCEN becomes extremely relevant. And that is one area that we are also, now the scoring models, imagine with all this data that we sit on and the visibility that we have, imagine the COVID situation itself, pandemic situation. So, for example, if there has been a spa which was operational pre-COVID in, say, Bandra area, and that spa in the pre-COVID situation was doing a 50th was probably, if you compare the peers around that in that particular pin code area, all of that, it was on the 95th percentile of what kind of business they could have done pre-COVID era. And during the COVID, of course, their business got impacted. So in a normal traditional banking lending, if they go to the bank, they won't be eligible for that because last 6 months, they don't know how to evaluate that and all the criteria would fall flat. You will never be able to get any sort of, assistance in terms of getting back on feet at this point in time. But this credit scoring model based on this cash flow based lending and the current scenario or the different way in which you look at it, different data sources, what happens is that if he has been functioning on the 95th percentile pre-pandemic, wherein you have visibility of data of others also in the similar area, the sector, the macro, the industry, all of that plays a good role. And now you can see last 6 months data in terms of how it has been coming up also. So this is where you can make a very informed decision making or a credit assessment decisioning to figure out whether you should lend to this particular business or not. And this is predominant, or rather, link this to the 20 lakh crore relief package, which was announced by the government as well for the SMEs, right? So the intent of this package is to get the right businesses back on track and to get the economy back on track. But imagine with all the traditional models, since we are not able to make a right assessment of this sort because of data asymmetry or because of lack of data, if that goes to the hands of, say, 50th, somebody who has been on a 50th percentile or somebody who has absolutely no way in which, after being affected, impacted for 6 months, even before if they were struggling with something, they can't come up, then it goes to the wrong hands. Then the decision, whole way in which the money flow happens goes in a totally different tangent altogether. So such kind of cases is where the cash flow based lending with multiple data sources put into a picture can come handy with it. And this is one of the areas wherein it helps us bridge this gap of 400 billion, which has always been a problematic scenario till now. So another good thing which is coming from the entire open banking scenario. So to conclude, open banking ensures collaborative solutions and it creates a regulated ecosystem and that addresses the current banking woes faced by SMEs. And that is a completely underserved segment on banking services front right now. So thank you for your patient listening. And I'm happy to take you through any.
Thank you so much, Deena. That was a very informative session and really enjoyed how you brought in a whole lot of different concepts and weave them into the large open banking story. Really appreciate that. There are some pretty interesting questions which I'll maybe start with. One of them is from one of the registrants at that stage had posted a question about the acquisition side of it and how the MSME segment, one of the key problems that you of course covered quite a few of the problems that they face. And one of them is around the cost of acquisition being quite high through the traditional financial services model and how that really limits the kind of products and innovations and servicing that traditional FS players do to this segment.
Right.
Do you all have any strategies that you all have seen or trends that you all see in the market in terms of how you've brought that down, particularly in a segment that tends to be traditionally less digital in its interaction?
So this is a very interesting question, in fact, and that takes me back to the initial experience I had when we were initially, pitching to the investors or talking to the investors about the idea that we have and all. This is one of the biggest apprehensions which used to come up. SMEs are traditionally very high cost acquisition. But thankfully, so far, with today, we add about 50,000 current accounts every month onto the platform. Even today, we hold a double digit, the acquisition cost, in fact. So the secret to it, or rather the way in which we were able to crack it, I would say, is we have to be number one, the prioritization of the product that you, I mean, what kind of pain point you solve is very important, and what kind of messaging you do. And third is also the distribution. So the ways in which you distribute. So one, we were able to do a very good, very good efficiency in the digital. We were able to do. Second, the banks and the partners became one of our exceptionally good distribution strategy for that matter. And then we obviously have feet on the street is another thing I wanted to mention, because we always discounted initially being from digital side. We always wanted to had this thing of like we will be able to crack it digitally, but SMEs is one segment which you need to still have a very efficient distribution network of feet on the street also, for that matter. But that don't necessarily mean that when the CAC becomes high, that is mainly because we are trying to solve everything on our own, and which is precisely the premise of the open banking also, right? I mean, not bank alone or somebody alone cannot solve this problem. So that is where we need to figure out very good distribution channels. Who has got onward as you go and has a connect to the SMEs, who has got that channel opened up already with some other relationship, and is there a way in which you can leverage that and work with them? So that is extremely critical. Where it becomes very high is that with whatever products we have, when we go and try and make that connect 100% on our own, is where we fall flat with the SME acquisition cost. And this has been a regular thing that we keep hearing. SME acquisition cost is very high. But let me tell you, whoever has that apprehension, we work on a double digit number, and that is a very much possible number.
Thank you. Yeah, that's really interesting. I think tapping into existing distribution channels that already have digitized the ecosystem is a strong strategy. Thank you for that. There's another related comment and something I think you started alluding to in your current answer, which is about the roadmap or the different steps that you took to get to where you are today, from an open banking standpoint, and also if you've seen similar trends in other organizations or other models. Given that the open banking, the new banking model in India doesn't, you yourselves don't have a banking license, there is a tendency to partner with a banking entity for core banking offerings. And then, as your slide mentioned, there are a whole lot of other offerings that you all can provide on top of that. So did you all go with a strategy where you'll first look for a banking partner and try to make their processes more efficient, or was it more that you first built a customer segment base and then went to a banking partner? Because we've seen those two variants in terms of strategy. What was your journey? Was there a specific product you looked at first to enter into the market?
So what we have done is, banking, as I mentioned, the core of our product, the heart of our product is a banking current account, because that is where all your money comes in and goes out, right? And the predictability of cash flow, grip on the cash flow is the fundamental thing that any business would require, and the ecosystem would require to act on it in any manner, right? So this is precisely what open banking solves for also. So what we did was, from the initial side itself, since we cannot in India, within India, India regulations, we cannot provide a current account as a service provider separately. Neither there's any license to provide that, which is quickly available. We'll have to go through the banking route. So we had an initial banking partner through which we started, and then we had limited things. As I mentioned, from a finance perspective, we prioritize because payments become extremely important, critical. So to start with, from a product, we didn't have all this product which I mentioned to start with, obviously. So we had to prioritize, and we looked at the pain points, which are the highest pain points. So we solved for two things: the collections and the payout part of it, with all the facilities around that available, including an aging analysis, including the invoicing, including all kind of payment modes which you solve digitally. and a very seamless onboarding journey also. So these are the three things which we focused on initially and then built on the rest of it, because that's when we realized, the entire journey from the beginning has always been, the goal has been to give them the grip on cash flow, for which there has to be the entire building blocks put in place. 100% of that has to be on the platform. Then look at how it can go to different systems, accounted properly, reports coming out properly, compliance and statute being taken care, and then that getting into the predictive way, which ultimately goes into either lending or a wealth management from that perspective for your surplus, right? For your cash management perspective. So that's the route we took. Long story short, it was starting with current account as a base, because that's essential for your cash flow the data understanding.
No, thank you. I think that's really interesting where you started with a core, like a banking product, and then you built around that and evolved as you saw more pain points. There's a little question where somebody's asking, do you see Khata Book and OK Credit as competitors? And just to add to that, like we've seen them having different strategies for first building customer segments and then looking at how they can monetize on top of that. So it's a slightly different approach to say what you were mentioning, but just to pose that question to you, do you see them as also being competitors in the neobanking space or entering into that space as well?
See, neobanking is very vast. So that's where I started with, why I'm talking more about open is mainly because just this is one of the use cases, how you can use open banking and neobanking, and one of the approach, right? The way which we have approached is now, if you look at it, we are taking care of payments, accounting, reporting, recording, and then the growth tools, all three put together. So these three, you will have it, or rather, across businesses, irrespective of whether it is a smaller segment, bigger segment, all of them have requirements for this. And that is why we have three different distinct ways in which we discussed about it also. And it is like more like a banking operating system, which if it's a SME who wants to come and use entire user experience platform as such, who doesn't have the capability of building it from scratch, you can use this platform directly as such, right? And all functionalities are available for you. But if you are an evolved enterprise or evolved business for that matter, you can take the APIs and solution into your system the way you want, right? Which is where, currently from the bank directly, most of the APIs, some of the banks, we really work with them to create their own APIs also for us to speak to it, solution it, right? So that's also a banking infrastructure challenge. It's not like all the banks have across banks, all sites capabilities are equally good, right? From an infrastructure perspective, with all due respect. So that is where we would, we come into picture, and that's why I mentioned, ended with it is a collaborative approach with banks and open banking system coming to ways in which you can implement. So, OK Credit, Khata Book, for that matter, you're right. I mean, there's a customer segment already defined, and there's a specific problem that is being solved. That's also a part of, they don't have the whole other part of it today is a very fragmented, informal kind of. Formalizing that with various ways in which they are collecting and they are transacting, that is a specific use case which is being solved for. And then onwards, of course, everything has an endpoint of, since the banking side has to be there, the lending part of it, all of that comes to also, which that's being consumed and used also.
Correct. Well, thank you for that. I think there's another question around the. Sorry, I got put on mute. There's another question around the business model of the open banking business model. In terms of what are the different revenue streams, how do neobanks generally make money? If you just want to summarize, I think you touched upon that throughout your presentation, but if you just have to talk through different ways.
So the way to look at it is, in the open banking, you have to look at the ecosystem. That's why we dwell upon a little on the ecosystem as well. There are various service providers and the various people who are consuming this as well, right? From the open banking perspective, one from the cost is where either a functionality or data that you consume becomes your cost, and your revenue comes from two models. In fact, we on the direct to SME platform, we have two models. One is a freemium. It is a freemium model. There's a free certain building blocks and everything which we give as free, and then there is a subscription part of it. So it's a SaaS kind of revenue which comes in. And the second part is also there is a average revenue per user which comes because you are sitting in the transaction, and there are various ways in which money comes as a part of payment facilitator, right? Being it as a card co-issuer, probably it could be interchange for that matter. It could be like from a lending, what money you make, it could be for that matter. Wealth management is there, insurance is there, there are allied services to that. So all of those value-added services and even the payments for that matter, right? Since you are in the transaction, there are various ways in which money comes to you as an average revenue per user kind of. So that is where user base and what you solve for is extremely important. Than the revenue streams are umpteen for that matter. If you were to look at APIs, when it comes to it functions as a license, it functions as the API fees and banking stack. Again, it goes to a totally different level altogether, depending on the size of the entity and the volume of transaction. I mean, transaction fees is another. So there are multiple ways in which money comes in. So the way to look at it is, if you are in the money flow, there are enough areas where the facilitators have some sort of money, or rather the share that you sit on. And that's usually, I mean, the best way is that when open banking comes into picture, you also tend to eliminate quite a lot of other factors, due to which the pricing would be much better. You don't have too many intermediaries in between, right? It's directly to the source.
Yeah.
So that's
Thank you for that.
Yeah.
Yeah. Thank you for that. Sorry, I lost track of time, and there are a few other interesting questions, but I'm going to move on to the other section which we usually focus on, which is the career opportunities and skill sets section.
Right.
So actually, there's in fact one question where they mentioned: is it necessary for founders to have a finance background to start a company in the fintech space?
I don't think because as a classic example, between the four of us, I am the only one who is from a hardcore finance background, and none of the other three are, and so is the case with most of the other neobanks for that matter. I think like anything else, your passion to understand the problem and to solve the problem will take you to what kind of skill sets you need to develop, right? So I would say it is definitely a no, but your passion is important.
Perfect. Could you maybe let us know what are the typical roles that you see in the neobanking space, and if you'd like to talk about some of the key capabilities that would go with each role.
Right. So in the new banking, I would say that one of the we ourselves are a tech and product focused company, right? So product is very key role in the entire thing. So when I talk about product, there are various areas in the product itself, because this is a new area, new way of doing things, and the innovation is the key to making this this point from here to where this entire industry goes is all about the ease of use, or rather how things are varied. There is complex, the ecosystem is complex, right? How do you bring it and solution it in a very seamless manner is the crux of it. And that's where a very smart the way in which the productization can happen is key. So even here as well, key roles that we look at are product, and that too for various verticals, right? Be it payments has got a different way in which you have to look at, lending has got a different way in which you have to look at, wealth will be a different way. And then when it comes to bundled, or rather the custom the segment specific neobank, which somebody was touching upon as well, right? That will be the natural progression. So when it comes to that, looking at each of the variants and then thinking through what can be done towards that. So that is where different elements of product comes into picture. Then obviously tech, I can't emphasize on the importance of that. And then coming to the data science is another part of it, the analytics and data science, which is also a key part of it, because data is the core of it, right? And if we have to disrupt systems like the current traditional credit assessment models, all of that, it's very important to have a very good handle on ML, data science, all of those capabilities, the analytics capabilities. So I would say these are some of the very common, or rather, if I were to look at a very broad perspective rather than specifics, which would be the skill sets required.
Thank you so much. I think you also touched upon the tech angle of it, because that's quite a common question we get in terms of, if people don't have a tech background, what should they really be focusing on in the space? And I think you alluded to that in terms of really having a product bent of mind, having that innovation in your thinking and understanding what the core problem is?
Yeah, to give you a comfort also, we are about 200 people right now. Probably 10% would be from typically finance background, and rest of all are from various other backgrounds.
Okay. Thank you. I think that's also a really great fact for our student community.
One more thing for comfort, I would say, in open banking and this kind of innovative new things, I sometimes feel my knowledge of finance is a baggage, because if you see the way in which we have done the platform also is like, and one of the challenges with accounting systems and everything is not an average entrepreneur, normal entrepreneur doesn't understand debit and credit. So this best suited, or rather best products are made by somebody who doesn't understand that side than somebody who understands, because you are building for somebody who shouldn't be intimidated with all of that. Right? So that is the way to look at it.
Correct. Interesting. No, thank you. I think that's a really interesting insight in terms of really, if you need to be fresh, sometimes you have to be untainted in that space itself.
That's
and we probably end with that insight. I think that's really interesting. Just want to take this opportunity again. Thank you so much. I think it's really been a very interesting flowing session, and we really appreciate you taking your time out today on a Friday to talk to us and talk to the student community. Thank you so much, Deena.
Thank you so much, Avnish, and thanks to all of you, and thanks for your patient listening. Thank you.
Thank you. And thanks to those who attended. As always, really appreciate you all asking your questions and participating. Please keep looking out for our next sessions. You can also write into us, like we always say, at admin@fintecheducation.com in case you have any feedback or any sessions you'd like us to cover. But otherwise, for today, thank you again and have a good weekend. Bye-bye.